I mean, it's exciting few days just following the Japanese yen. Is there space for authorities to do more?
Yes, I think this time the authorities are determined to really break 155, the key level. If they fail this time to break that level, then I think the market will see, the authorities have exhausted policy options. So the fact that they started this intervention means they are strongly determined to alter the market demand-supply balance. And I think that change will happen once 155 is broken. And also, it's a coordinated intervention.
No,
right?
I was going to say, I mean, aren't the stakes higher now that the U.S. has gotten involved? You have joint intervention for the first time in 15 years or so?
Exactly. So the cost of failure is pretty big this time. And that's why I think we have to assume they are determined to do whatever it takes to change the market dynamics. And coordinated intervention really removes the hard limit on intervention associated with unilateral intervention, that is the balance of foreign reserves Japan has.
Not to mention that you can also have that Fed tool where you can borrow as much as, $60 billion a day without selling treasuries. Does that sort of lessen the burden on Tokyo and also relations with Washington?
Yeah, exactly. So, we don't know how this will be used in practice, but I think the market now knows Japan is willing to use this facility. The U.S. is willing to, let Japan use this facility. And, the biggest, one of the biggest, the side effects of intervention is that Japan might have to sell a large amount of U.S. treasuries, and that could destabilize the bond market in the U.S., which could also spill over to Japan as well. So I think this facility definitely helps, and I think Japan can probably do more than otherwise.
Why use the euro, which is speculated right now, instead of the U.S. dollar if the U.S. actually went ahead and did that? Was it trying to not to weaken the greenback, and what are the implications of this?
That's a very good question. I don't fully know the background, but maybe the U.S. would not want to sell U.S. dollar. But I think maybe a bigger implication could be that, it could be a coordinated effort across Japan, U.S., and maybe, broader G7 community, because, the fact that U.S. selling euro implies Europe might have been noted, given a notice in advance. So, yeah.
I mean, how much pressure does this put on BOJ Governor Ueda when you have the United States, who's also in the past said that monetary policy should be left alone, in a way implying that they actually need to hike at this point?
Yes. So the BOJ is a key factor, right? So one argument is that stronger yen reduced its pressure off the BOJ. But I think the argument should go the other way, because short term maybe they will succeed, but longer term it is true intervention is not effective because they cannot continue indefinitely, right? And this is a coordinated effort. When you ask someone to join your project, you have to have a goal, and that goal cannot be just to buy time, right? You have to have a long-term goal and a long-term plan. So I think Japan should have a more comprehensive policy response beyond FX intervention. And as you said, Secretary Bessent has historically argued that BOJ rate hikes are needed and effective to support the Japanese yen.
And yet, is that possible to have such coordinated and long-term strategic planning here in Japan when you have an administration like Prime Minister Takaichi's that wants to see expansionary policy?
Yeah, so I think that's why longer-term success is much more uncertain than short-term. So here, what they need is faster BOJ rate hikes, maybe more balanced fiscal policy. But again, it's not unilateral action by Japan itself. You have to, you also have this repo facility announcement. So it seems like this whole move has been well prepared. And from that perspective, I think there's a stronger case that Japan will respond in a more comprehensive manner than otherwise.
Is that why you think your year-end target for the yen is still low 150s?
Well, my argument, so we changed our bearish yen view in May to a constructive one. And our argument is that, the balance of payment has been improving quite a lot for Japan, for the Japanese yen over the past year. And, that should prevail once, the market recognizes that dynamics. And I also think there's a little bit of a gap between the actual, factor behind the yen weakness and the market's view. Actually, I think, the rise in Japanese equity over the past year and a half has led to a lot of equity-related yen selling hedging by foreign investors. So it's not just policy risks that have driven the yen weakness.